What is up, guys? It's Angel here, and today I'm going to be showing you guys a breakdown of two trades that I took out of this week. And I just want to go back to the trades and show you guys how I took advantage of the market to win these two trades. So let's get right into it. As you guys can see, these are the two trades that I took. There are winning trades, two buying opportunities that I took. Especially on USD JPY, it's been very bullish. So let's go to a clean chart. That way I can show you guys a little bit better. And the first trade was around, I took it on Monday, July 28th on 9 a.m. All right, so the first one was a buying trade. Let me just get it up here. So the first one was buying trades. Let's do a top-down analysis. That way you guys can see what was my overall thinking when it comes to the overall trend. So as you guys can see, we are very bullish as the monthly did finish very bullish. And if we go to the weekly as well, it's showing lots of bullish momentum, especially as you can see, we're like breaking almost, we're right there about to break the MA. Which was bearish, but looks like we might break it. It could reject, but then we might break it. From what it looks like, there's lots of bullish pressure that there might be a break of M8 on the weekly time frame. So now if we go to the daily time frame, we see that the market, it is very bullish. We're making higher highs, higher lows, as you guys can see. We're creating right here. We're creating right here higher lows, higher lows, higher lows, and higher highs from here. This is a higher high, higher high, and we're creating another higher high. So as you guys can see, we are very bullish when it comes to the market. Is going to be on the daily, guys. So remember, let's go to the H4. So based off the H4, our trend right here. So our last period's higher low was down here. So we had it based off my fib based off the H1. So let's go to the H1. I had it based off here. Boom. And it based off here. We did create a 23.6%. I knew it was a 23.6%, but the market was very bullish at the time. As you guys can see, very bullish, creating higher highs, higher lows. And then we did break this previous level of resistance right here. And we were waiting on that rejection, right? We were waiting on that rejection for that level of confluence, where that could give us a little bit more confluence for me to be able to enter the trade, right? But we were just waiting on that rejection, but we didn't get there. So I did see on the M30, as you guys can see, I did see lots of wicks. As you can see, this is a exhaustion level. So we're making exhaustion wicks. So you guys can see we did break that level of resistance, meaning that we're still in a bullish trend. We're very bullish right now. We have a level of resistance as well based off the H4 and H1. Let me create it right here. And if we go to a lower time frames, that way we can see it a little bit better. We did respect it, and then we came all the way down here. If we go more towards the lower time frames, look at the M30. We're making lots of exhaustion wicks, meaning that sellers are exhaustion. There's lots of seller exhaustion there on that area, and we created a bullish engulfing through there. and that was based off my um, another confluence that we had was also that the MA, we were respecting the MA through there, and we just took that trade. And let me see where I entered. It was specifically 148, 141. Specifically 148, 141, which I did enter here. And then I took my stop loss to a 35 pip stop loss, just giving me lots of room in order for me to, sustain that trade and not get stop loss for no specific reason. So even with 35 pips, we're still in a risk to reward of 2.8, which is very good risk to reward when it comes to taking these trades with a nice 98 pips. So yeah, so we did get that trade in. We were holding it, and I have a level of support, and this is where the market did respect down here. And I have a level of support, but it is still, if you see on the H1, we did break this level of support, but it's we haven't broken it. It was just more of a tested area, and it came all the way down here as well, and that's where it tested it once again. And this is what we were waiting. So I did enter the trade a little bit early, but I still hold through all the madness, and I was very confident with my trade, and I knew it was gonna go up eventually. I just needed to hold, and this was like my last final decision of like holding it, because if it would have broken down, if it would have kept on going lower and lower, then I would have taken my trade out of. I would have sold the trade, right? I would have took the loss of it, and I would just wait for another opportunity for me to enter for the bullish trend. So that's if you go based off the H4 now. This is where the H4 came in handy, and we created a level, I would say a level of 23.6%, because it didn't really go all the way down to 38.2%. It just rejected the H4MA. It did reject that. That gave us even more confluence. I could have entered there, but since I am trading a funded account, and the funded account only gives me a maximum of 2,000, like I can only make 2,000 profit each day. Yeah, I can only make 2,000 profit each day, guys. So that funded account, it's with top tier trader, and it's the flex one. It's pretty good, but it makes you very consistent as a trader. Like I've been very consistent. I'm gonna show you guys the results of the funded account where I'm at. I'm about to pass the phase one. I'm at like 108,000, 9,000. I just need 1,000 more so that I can take that. Just one more trade to pass that phase one of that 100K funded account. Then I have to go to phase two where I have to make 5%, which is 5,000. And then that's where I'm at phase three, which I get my money back, right? And then whatever I make, a percentage of it, of the profit, will be mine. So if we go back to the charts, as you guys can see, we did create a level of bullish engulfing right here. So I could have entered through here as well based off this bullish engulfing, based off how it's respecting this level of broken level of resistance, and now it's turning into a level of support. And if we go to the H4 as well, guys, it's respecting a level of MA. So it's respecting a level of MA. You see those exhaustion wicks. You see how it's the candles are the candles are closed with seller exhaustion. That's another confluence that you have. Another confluence would be that it was a level of resistance that broke, and now it came back all the way down to that level of resistance that turns now into support. That gives you another confluence there, and plus the H1 plus the H1 bullish engulfing, that gives you even more confluence to enter the trade. And if you go even lower down to lower time frames, you have here a break of minor resistance based off the M30, which should give you even more level of confluence to enter the trade. You could have entered through there, giving you all those confluences. You could have gotten a 45 pip stop loss if you wanted less risk, right? you could have entered all the way down here, which with a nice 30 pip stop loss, or even 35. That's why I basically go with. You could have entered that, and let's go back. I don't know why I took it. You could have entered that, and then you could have made all that stuff, all that profit. Give me a second. My dog is barking. I'll be right back.
One eternity later.
All right, so he stopped barking. Now we can continue with the video. So yeah, where I was, from where I was, as you guys can see, you could have had another trade going on through there. You could have multiple trades, especially the one that I took. It was a little bit early, but you could have still hold on through it if you once you. I hold on through it because I know my risk strategy. When I risk, I try to risk a little bit. Try to put my risk ratio like a little bit more than what it's usually. That way it gives me more, I get more comfortable when I'm in a trade, especially here. Atri! Dios mío. So yeah, that's why I put a good risk reward in my strategy in my trades, and I put a little bit of cushion in there. That way I know when the market goes against me, I can hold it a little bit. That way I don't get my stop loss hit, especially there. So, and it did help here, and could have made all that profit. I didn't, like I said, because of the funding rules, and I'm trading a funded account. I didn't take another trade, but I would have taken another trade. Just what I'm trying to tell you guys with it. But anyways, I took the trade all the way up here, and that is because I had, once again, like I told you, I have my 2,000 daily profit limit. So that was my daily profit limit that I hit, and it came all the way up here. So I took out of the trade. But you guys, if you guys are trading another profit account that doesn't have those daily limits, or a live account, you could have made a lot more money than what I did, and the results would have been a lot more, of course. So that's one of the trades that I took, and another trade that you could have taken. The other one would have been right here. So with this other trade, since we did create another higher high, we would have made another level of fib levels from point A right here, point B 23.6%, and right here, we're gonna made it right here. This is gonna be our point B, point A, sorry, and our point B right here, and point C was right here. So you guys can see we had a level of support going on right here, especially down here, where this was a level of resistance. Let me take it out. So this was a level. So this was a level of resistance here that we did reject again. So this trade is basically going to be the same as this trade right here. Basically the same. We came all the way down, market rejected. You have lots of confluence here where the market is telling you buy, buy, buy. Especially here how this was our previous higher low, higher high. Sorry, this was our previous higher high, and then we broke that level of higher high. We created another level of higher high, so we're looking on a level of higher low. So where's the highest probability the market could make another level of higher low? It would be either right here on this level of support that it could respect, or on this level of broken resistance that could turn into level of support, and that's what it did. So the market did do that, and as you guys can see, we did create a level of even though it didn't close the way like a bullish engulfing should, but it is a bullish engulfing. Don't like it because it closed with lots of bullish exhaustion, but still we are still very bullish, and especially down here we're still creating seller exhaustion as well. So if you go and on the H4 as well, you can see seller exhaustion, like those two candles, and this is an engulfing seller exhaustion. All right, so it's very bullish. So I saw that, and then I saw as well on the 30 minute, and this was Asian session, almost London, starting London session. So remember USD JPY, I traded mostly New York session, but you can also find good moves like this one on an Asian session, almost London session as well. So basically USD JPY, you can trade it throughout. It just depending on the volatility and where you are in the market. So it's very different when it comes to USD JPY. It's not like US 30 where US 30 you majority of the people you want to trade it on New York session because that's where most volatile it's gonna be that's where the US session is where it's gonna be most volatile at. So that's where you want to trade it. That's where you're gonna make more money off of it. You're not gonna trade it on Asian session where it's just consolidating or it's just very choppy market, you know. But as far as USD JPY, it's very settled sometimes. Sometimes you see a choppy market, sometimes you see a good trend. It all depends on how you identify it and when you want to take a trade in, and giving you that confluences to give you the high probability, right? Giving you that edge to enter that trade, right? So basically here I did see that H1 engulfing, even though I didn't really like it. I did see, as you can see on the 30 minute, this is a level of double top based off here and here and here. Triple bottom. I said double top. Triple bottom. This is a triple bottom right here. Respected here, respected here, respected here. Respected 3 times, guys. 3 times. Respected 3 times, giving you it's a strong level of support, you know. So you know that, and then you also have here a level of resistance. That's what we're trying to see if it'll break, right? That's what the goal is, to have that break and then continue that trend. So based off that, I did take the trade. Let me see where I took the trade. 148,868. So 148. I know I took it a little bit early. 148,868. Yep. I know it was around 11:45 around there, like 12 around there. I know I had a 35 pip stop loss, and then my take profit was just based off the H1. Based off the fib level, which is my target one. And look at this. Just hit it nice and easy. 115 pips. I know I didn't get 115 pips. I got 112 pips. I actually did get it. Okay. So 112 pips, guys, there with a nice um, 3-to-1 risk to reward. Very good risk to reward. Very good trades. Nice trend going overall. These are the perfect trades that you guys want to be aware of and take advantage of it when the trend, going with the trend, lots of confluences, giving you that comfortability and giving you that advantage to take a trade, especially when it comes to high probability trades like this, giving you an edge over the market. So those are the trades that I took this week. As you guys can see, let me go to. As you guys can see, this is my. As you guys can see, this is my chart account balance. Look at this. I'm at 118,000 up. I started with 100,000, and the account right now is at 118,000. But like I said, I would have passed the phase one if it was in the flex account that I took from Top Tier Trader. I would have passed it, but I got that one, and my daily profit is 2,000. So I basically passed I basically could have passed. I would have been at phase three basically if I had bought the original one, right, without the flex. But it's all good, guys. It just made me a better trader at the end of the day, because it made me very consistent. Now I am very consistent. As you can see, look at this equity chart. It's just going up and up and up and up. Yes, you see sometimes consolidating, but majority of the time it's just spiking up. You know, and that's what you guys want to see when you guys analyze and you guys journal your trades. You guys want to see that equity curve going up, right? Of course, you're gonna see sometimes some ups and downs, some downs, some down moments. As you can see, it's not always like this. You're gonna see like this, ups and downs, but the majority of the times it's spiking up. That's what you guys want to see on your equity curve, giving you right, that profitability, that giving you that long-term profitability when it comes to trading in the markets. You know, and that's what you guys want to see. I do want to start documenting a live account. That way, I can document it to YouTube and document you guys how I can turn that into, let's say, 500 into 1,500 or even more. So if you guys want to see that, comment down below, and as well subscribe down below, guys. That would help me a lot. That way I can provide you more content and give you guys more tips when it comes to trading. And I hope you guys have a wonderful day. Peace.